Okay, we finally got some needed moisture, much needed moisture. I don't think it's rained significantly in over a month, and we finished up August with a lot of weather close to 100. Really, it took our corn and bean and maize crops slash sorghum slash milo from very, very good conditions to over half the crop is suspect. So we'll take this rain. We need it. While it will up the humidity, most of our temperatures are forecast to stay in the low 80s or high 70s. So fall has crept into the south central plains, and it's welcomed. Not a lot of news to drive the trading overnight. Yemen fell yesterday, taken over. The capital city in Yemen was taken over by Shia backed rebels out of Tehran. I mean, if you look at the conflagrations in the war, the outright shooting, the chaos, the total breakdown of organized states throughout the Middle East, what's going on in the Ukraine, I mean, it is, things are getting out of hand. I mean, you can just see stuff really, really starting to boil. And the reason it's important is that the West runs its transportation and fuel on crude oil. And while the United States may be the largest producer in the world of petroleum liquids and crude oil, we still import about 10 million barrels a day of crude oil. So back when we went to war with Iraq, invaded them, everybody, blood for oil, we can't do that. This is just to get our hands on Iraq's oil. Well, that couldn't be farther from the truth. Russia and China have gotten their hands on Iraq's oil. They're much bigger participants in what's going on, China for sure, than the United States in producing their crude oil. What it was about was keeping the sea lanes open so crude oil could freely flow to the rest of the world. And that's the danger right now. I mean, if the Persian Gulf goes down, if Saudi Arabia is threatened, any of the Gulf states, any of those producers are threatened, if the Iraqi oil is threatened, I mean, the price of oil could instantly be $150 a barrel or higher, and that definitely would take the world not into a recession, but worse. Not to mention what goes on to what happens to the civilian populations in those countries. So this whole deal is, I mean, it's just uncomfortable. I mean, we just see it all around us. So that's kind of probably the biggest backdrop of the world news that we see, and it's holding up crude oil prices steady, and it's holding gold prices steady too. It's made the dollar stronger because of all the water that's between us and our enemies. Makes it harder to get to the United States and do significant damage. So that's where we are. German business confidence declined for the 5th month in a row, and a lot of that is the sanctions the EU has imposed on Russia for being behind the shooting down of the Malaysian airline. So here we are. Ebola picked up, the CDC yesterday said by January could have 1.3 or 4 million cases of Ebola in Africa, and think what that does to their economies and their ability to ship and travel. So it's hard to be short treasuries. It's hard to be short gold as an individual in a major way. It's hard to be short crude oil in these situations, and we all scratch our heads about what's up with the stock market. So that's where we find ourselves today. Yesterday we left this market wanting to sell, failure to take out the 18 to 22 area, and we were buyers 9 to 13. The overnight session low is 12. The overnight session high is 19. I think that's probably going to hold right now. So Leaning against 19, we've got to sell 18 to 22. There's a chart high at 22.5. Then resistance really starts to build from 26 to 30, so that'll be sell 2. New home sales is the big nut, in fact, the only number today that has a chance of stirring up the markets, and it usually doesn't stir up the markets. But the real estate sector is what the Fed's been trying to protect and inflate. They have not been able to do it commercially. They have been able to do it with residences. And it's the second leg of the Fed's forecast for moderate economic growth in the 3% plus range. Never mind that for every one of these forecasts for 3% or more growth have been revised significantly downward since 2009. Then we have crude inventories at plus 700,000 barrels. So not much news to drive our markets today. I think the focus will be the 5-year auction. Can't go straight up without a major piece of news, so there will be some back and forth today. And the pattern has been 3 higher auction prices. So yesterday's auction got done at 12.5. We'll be expecting today's 5-year auction, when it happens, to be at 12 or higher. On the buy side, we're going to keep our buy at 9 to 13. Worked out pretty well last night. We'll just leave it there on the idea that they have to take prices back and forth, and 1 to 5 for buy 2. And that's it for the note. Looking at the 30-year, knob spread held overnight, didn't really widen, didn't get any worse. We left yesterday's market wanting to sell 16s to 20s. The high is 17. Our buy was 5 to 9. Pretty tight range. Caught both edges of the market probably about as well as you could catch them. I don't see that that's a lot different this morning, so we'll make selling 16 to 20, sell 1, and then 23, 27, sell 2. On the buy side, the low is 6, so we'll make 4 to 8, buy 1. Then if it stops below 8, and then 29 to 01 for buy 2. 5-year auction hopefully will give us some back and forth, some trading range action today that we can all participate in. Okay, gold was pretty much on hold last night. It is trying to sell. It came inside our sell band. Yesterday we had a 25-28 sell. I think we just touched the bottom edge of that. Of the sell zone. We had a 25-28 sell. On our buy, we were at 18 to 20. Haven't quite gotten down to our buy zone, so I think we'll just probably leave that the same. I think because of the lack of institutional participation in buying the metal outright, that gold is headed lower. But I mean, these damn conditions around the globe, I mean, it cannot make anybody comfortable. And I remember back in the 60s how everything really seemed to be coming apart at the seams with the riots and the assassinations and the wars breaking out all over in Vietnam, etc., escalating, what was going on in South America, what was going on in Africa. I think we're in very, very similar situations these days where you just, it's hard to get really comfortable. I know economically we all sit back and, you know, most small businesses are getting by. They aren't really feeling super optimistic. Their doors are open. They've laid off a lot of people. So, I mean, there's just a feeling of unease everywhere I go or turn. Everything I see in the news. So, you know, the economy is a state of mind, and economies grow when people are willing to take risks. They'll put $1 into the economy with the hopes of getting $1, more than $1 back. And I don't see that right now. I see people still sitting on dollars, still worried about what is coming. Okay, we love the sell in the euro. London capped out just at 70 last night. We had a sell at 70 to 80. That's the top end. We love selling when London sells. I just think it's just a great trade. Like I said, I don't like going home short on our close, but I like to engage the euro, gold, and crude because of Brent on London time. And by the time the London market's open, bad news out of the Middle East, bad news out of the Far East, bad news out of Ukraine, Russia is already in the market. So I don't like that risk on our close, but I do like to engage from the short side. On London time, okay, why are we a seller? Every time we get a chance. Nothing but Bs. So in the overnight session we have a B. The market comes to a balance. This is our move out of the middle. And a move out of the middle, we do not want to fade with limit buys, value area highs, and value area lows. And in this case, we got plenty of time to get long. So the issue for us is, will current support down here in this 25-30 area hold? Right down here. So our first buy is going to be pretty much where it was last night, 20 to 30, leaning against support. This 50 to 60 area, trying to pick up this area right here, will be sell 1. And then 70 to 80 will be sell 2. And we'll keep 28 plus or minus 5 is buy 2. I think the short side of the market, again, is the way to play this. I don't see what could turn the situation around for the euro. With the strength in the dollar versus the euro, they might gain some export business to the United States, which could help their plight. But not much going on positive in Europe right now, and if the Russian sanctions get any deeper or more tit for tat, and Germany is really hiding that. They do not want the sanctions increased, no matter what happened to that Malaysian airline. And unfortunately, because Europe has put themselves in a situation where they are very dependent on Russian natural gas, they can't say a hell of a lot against Russia or do much against them. Okay, looking at crude oil right now, you can see we rejected prices below 90.75. We came into crude last night wanting to sell 92 and a quarter. We thought we could go a little bit higher. We stopped just below 92. Here's your London high. If I were to do an M split, see what it looks like. So why are we sellers in the overnight? Well, we got ourselves a B. We definitely have ourselves a B right here. If we go back and look at the entire market, we have ourselves a pretty big B. So structurally, we are sellers, but we don't think the bottom's falling out of the market either. So based on where we are right now and where the market has rejected prices, 75 to the buck is sell 1, 25 to 50 is sell 2. So Tom yesterday pointed out that Yemen, the capital of Yemen, had fallen. That's not good news. It strengthens Iran, who we are going to allow to have a nuclear weapon, an atomic bomb. And even those that oppose the ruling class in Iran want an atomic bomb or nuclear weapon because it's the cheapest form of defense you can get. If you have nuclear weapons on a missile, it's pretty hard to attack you. The danger of Iran getting the weapon is how it destabilizes the Middle East. And if Iran is allowed to have that, the opposition to Iran, Saudi Arabia, and the rest of them will certainly, they've got the money to do it, get their nuclear weapons too, and then Iran uses surrogates to fight their battles for them. They would love to explode a dirty nuclear device in the United States. Get the great Satan once and for all. So I see, right here, we're looking to be buyers in crude below 91 and sellers at 92 or better. And I don't think that will change. But this damn situation in the Middle East, I mean, it's not their problem because of crude oil and its shipment and such and how it runs everybody's economy. It's everybody's problem, and it's getting out of hand. Okay, when we take a look at the E-mini, this single print up here at 90 is significant. You can see this area over here where the market rejected prices before, and you can see how this area of rejection now has become resistance. So this 88 to 90 is pretty stout resistance in my opinion. We've talked about the last couple of days how much support structurally there was in this 68 to 70 area. So we've had 3 days down. Will today yield an up day? London's low was 73s, and we're at 77 right now. So we've got pretty good support in the market at 70 to 73, then obviously 65 to 68. On the resistance side, last rotate up yesterday was 81, 82, right in this area. And then we have our 84, 88 area up in here. So the obvious stop last rotate up yesterday is this 80 to 82. So our first sell is aggressive is going to be 79 to 81. And if that area can hold, we've got a pretty good chance of retesting 68 this morning. Our second sell is going to be our 84 to 86 from yesterday. And that's where resistance from yesterday really is. So this is a question mark. We can take a trade in this area. Selling the 85 to 90 area, I think, is a gimme. That's an area, and especially right up against this area, right, this 88 to 90 area. I think that's a beautiful trade. And if we get taken out there, we get taken out. New home sales, 430K. The chatter will be, if it hits this number or greater, the housing market is coming back. Our economy is strengthening. I don't know if that's true or not. But if this number comes in greater than forecast, that's the boost that's going to get us to this 80, 82 area, in my opinion. On the buy side, we'll use our 70 to 72. To get started, we'll probably have to raise these, then our 65 to 67 for buy 2. But we'll let that first rotations get out of the way, and we'll come back and make our adjustments. But the 88 to 90 area really represents a very, very solid sell in my opinion. And we'll have to watch closely what happens in our 80 area. So 85 to 90 is where I would like to set the shorts, and then that 68 to 72 area is where I'd like to get long structurally. And what else is there but structure when you get right down to it? Okay, it'll take about 15 minutes to get everything up and posted. I'm going to get busy on that right now. Be back with you as soon as possible.